ladies and gentlemen. We're here at the January 2018 Metal Investor Forum. I'm here with Brandon McDonald. He's the CEO of Fireweed Zinc. Fireweed just put out a very impressive resource update. There's a lot of excitement about your company at the show today. Perhaps we can start by just walking us through that resource update and sort of give people an idea of how big a change, how big an increase was it exactly?
Yeah, so when we optioned this project, we inherited a historical resource from 2007 that was 6.5 million tons indicated and 24 million tons inferred. And the resource update we put out a week and a half ago is 11.2 million tons indicated at 9.6% zinc equivalent and 39.5 million tons at 10% zinc equivalent. So this was, about a 60 to 70% improvement in all categories. Very big step up.
Yeah, and that's the resource. The resource wasn't actually small to begin with. It was you were getting into mid-sized. I think you got to be sort of beyond mid-sized now. I guess the question everybody's going to have is, okay, great, Brandon, you got this big resource. What does it mean? What's next in terms of sort of walking people through economics and showing like, yes, this thing makes sense?
So we've commenced our preliminary economic assessment, and we expect delivery of that likely early Q2, so early April, hopefully this year. That's going to be some updated metallurgy, building on the metallurgy from 2012, looking at how it's zoned. That's going to be obviously everything else in a PEA, mine plan, economics, capex costs and what have you. And what we're going to see and what we're going to be able to demonstrate is that this project, although it has its challenges, has ample size and grade to not just overcome those challenges, but leave them in the dust.
Right. Yeah, I mean, you're clearly very confident that the numbers are going to look quite good, and I mean, I'm pretty confident too. I mean, given the grades you're dealing with, you're dealing with 10% grades and the current metal prices. It's a pretty big NSR you get to play with. That gives you a lot of room.
Yeah, and the untold story, perhaps, when you're looking at the average grade of a deposit, is okay. Well, how does it zone, and is my high grade in early mine life or late mine life? And you look at zones like Tom East, which the inferred tonnage alone is over 1.5 million tons at 27% zinc equivalent.
Wow.
Right, it's got a little bit of indicated, under 1 million tons indicated at around 20% equivalent. When you can start your mine life with stuff like that, your payback period, your economics are so front-loaded. It makes a huge difference to your IRR and NPV.
Now, I mean, obviously things, between the resource estimate, I mean, a bunch of new coverage, I mean, the stocks traded very well in the last month, I guess, even a little bit more than that. And I know you're getting questions from investors saying, was that it? Have I missed the boat? Is there nowhere to go with down now? I mean, obviously a lot of this is based on peer valuation. Can you give us a sense of where do you sit now with this new resource compared to others in the zinc space?
Yeah, first I would note that if you consider the valuation we had with the old resource, the valuation we have now with the new one looks super cheap in comparison, right? And most of the move we've done could almost be erased in your mind in a relative sense if you consider what it actually is now on the new equivalency basis. And compared to our peers, despite the fact that we have the largest project amongst our closest peers, we have the largest project by any juniors except Arizona Mining, who has over $1 billion market cap, and one of the best grades. We are the lowest valuation on an equivalency basis, like EV per pound of zinc equivalent in the ground. If we were average, I would be beating the drum that we're undervalued because this is not an average project.
Right.
But to be the lowest is absurd, right? Like it's the amount of money on the table for the taking by a shrewd investor is a lot.
Right. Yeah, I would agree that it's a great looking project. Fireweed did things differently than a lot of its peers. I mean, you have a very tight share structure compared to most others in the space, and that, I think that gives you some running room. And I suspect once that PEA is out in a couple of months, I think there's probably a residual amount of concern just because it's in the Yukon, blah blah blah. I think a PEA that'll alleviate those concerns. I think it's got quite a bit of room.
Yeah, I think a lot of the biggest boys don't buy before PEAs.
Yeah.
All right, so if you're able to look around the corner and get some sense of what it might be, you can get in before that money comes in.
Right.
And just like our resource update was, I think, a surprise to the market, I maintain the PEA is going to be a slap in the face to a lot of the market. We're not priced like a successful PEA.
Yeah.
And I think we will have one.
Yeah. Okay. Sounds great. That's Brandon McDonald, Fireweed Zinc. Check them out.